In today's video, I'm going to show you the best crypto trading strategy for 2025, and today's strategy is definitely something special. That's something I can tell you right from the start. On one hand, it's an original creation of mine, and on the other hand, the big advantage of this trading system is that we can place our trades in advance. This gives us the big advantage that we don't have to sit in front of the chart all the time. Instead, we have clear parameters that already tell us in advance when we need to enter positions and where our take profit will be later on. I'll explain everything in more detail later in today's video, so make sure to watch until the end. At the end of today's video, I'll also show you a second strategy, or rather a variation of this one, so you can use this strategy on smaller time frames for scalping, but more on that later. Otherwise, if you're new to the channel, feel free to like and subscribe. That would really help me out a lot, and of course, feel free to check out the other two trading videos as well. I've already introduced a trading strategy to you here before. That one is definitely also extremely good, but to be clear, with that trading strategy you had, in quotation marks, a small disadvantage. You really had to sit in front of the chart the whole time. You had to constantly keep an eye on the indicators, and that's exactly the big advantage of today's trading strategy. You can plan everything in advance, because we're working with a clear system here. Otherwise, feel free to check out my trading video course as well. In it, I've basically bundled together my last 5 years of crypto trading experience. So it's definitely worth building a solid foundation here first. But now, let's move on to today's content. What is this trading strategy all about? On the one hand, it's a combination of Fibonacci retracement levels, which we'll talk about in a moment, and a custom indicator of mine, namely the VLP, Vincent Liquidity Profile. We'll discuss in a moment what that's all about and which parameters need to be met so that we can enter positions here. That's all there is to say about that for now. By the way, I've also prepared everything for you here in detail. Otherwise, before we get started here, you obviously need the indicators first, because at the end of the day, everything is based on the idea that we trade according to liquidity in combination with the individual swing highs and swing lows. Just to address this point in advance, in case you're wondering where you can get the indicators, I've linked everything in the video description, or you can get everything in my free trading group. I've put everything together for you here again. There you'll find both links to the trading strategy and also the complete PDF showing exactly what the individual parameters need to look like in order to set everything up correctly so that the trading strategy works. As I said, I've linked it in the video description. I've also explained there how you can get everything completely free. Like I said, I'm not selling you anything or anything like that. You can join my trading Telegram group completely free, and there we can continue to exchange ideas in the chat, and you'll also be kept up to date on my trading positions. Because one thing should be said here, I have personally been using this trading strategy for several weeks, actually for several months now. So this whole trading system involving liquidity and Fibonacci retracements is something I've actually been using for several years now. Of course, there are also modified variations at this point, that has to be said clearly, but here I've limited myself to a clear system so that viewers can have clear reference points for where to enter positions and where the individual take profits are later on, etc. That's all I have to say about that for now. Once you have added both indicators to TradingView, as I said, you just need to click this link from my group, favorite the entire indicator, and as soon as you have favorited both indicators by clicking the star, you can go to indicators, then favorites, search for my VLP indicator, and you'll find my indicator there as well. That's all for now on that topic. It's definitely extremely helpful. You'll soon notice just how strong the confluence is at times between the Fibonacci level and my indicator, but more on that in a moment, as I said. Now, first of all, just so you're up to date and can make the right settings here. You can find the Fibonacci retracements at the top left here. Then you can basically draw the Fibonacci retracement here from a swing high to a swing low. So just to explain briefly again, because this strategy is based entirely or mostly on using the Fibonacci golden pocket level to find entries, and the Fibonacci golden pocket level is always located at the 0.618, 0.65 level. As I said, I explained all of this again here in my PDF, what you need to pay attention to. At this point, you can also pause the video briefly and take a screenshot of my settings. I would definitely recommend that you use the same settings, meaning how the individual Fibonacci levels are set, and ideally, you should highlight the 0.618 and 0.65 levels in a separate color. In my case, I set it to orange here so that you have a direct reference point for where the level should be, because statistically speaking, this is by far the most important area for the Fibonacci levels, so now you know. That's all there is to say about that for now. Apart from that, you should of course also be able to identify individual swing highs and swing lows on the chart for your trading strategy, basically based on the price action. For that, I prepared a special indicator just for you, which will give you some support in identifying exactly where the individual swing highs and swing lows are. This will become much more important later in the scalping strategy on a 1 minute or 2 minute time frame. Right now, on the higher hourly time frame, it's more of a secondary concern. I think each of you can identify individual swing highs and swing lows here. That's all there is to say about that for now. Now let's move on to the trading strategy. What does the preparation look like? What do you need to pay attention to? Etc. So, I would say step one is definitely being able to read the price action in the first place, and based on that, draw the individual Fibonacci level. We can also go into playback mode for this if you like. So, as soon as a new low point is reached here from a new structure, you can draw the Fibonacci level, in this case in a downtrend, from the high point to the low point. And then, once you've drawn the Fibonacci level here, you'll already have a clear structure to work with. You'll also notice that we already have some initial reference points here based on the Fibonacci golden pocket. Here are the first order block formations. That's definitely not bad to start with. Then in step number 2, you definitely need to add my indicator, and this is extremely important now. Now we're getting to a very, very important point, namely the correct period length. You just click here on the settings, and then you can set here how many periods should be included. So basically, depending on what number you enter here, the data for this volume indicator will be processed accordingly. And for example, I could just enter 500 here. And what you'll notice then is that the entire volume indicator now has significantly less data. And in this case, only the data from this vertically dashed line onward is being calculated. So basically from this point in time. That is definitely far too little. You need to include at least at a minimum all the data from the origin of the structure, and that's why we have to significantly increase the period length here, for example to 1400, so that we definitely have enough reference values, including from past price action. And now we can see right away that we have a perfect confluence here, a perfect alignment between the Fibonacci golden pocket level, between the 0.618, 0.65 level, and our side volume profile. And we can see this perfectly here. And something like this is definitely a beautiful dream setup to have, so to speak. And by the way, the entire trading strategy is based exactly on this, the principle of confluence, meaning the alignment between the Fibonacci golden pocket level and our volume here. Just to explain briefly at this point, when there is an increased volume here, we have an area, a price range, that is being defended extremely strongly. Both from the bulls and the bears, this is a price range where there is strong resistance coming in, or conversely, extremely strong support afterwards. And in this case, the probability is significantly higher, even completely independent of our Fibonacci's, that a rejection will occur here, essentially resistance, causing the price to bounce off. That definitely needs to be mentioned as well. Because this indicator gives us clear information about where there is increased volume, which price ranges are strongly defended, and where volume gaps occur. So if I change the periods here, for example to just 500, you'll also be able to notice that volume gaps occur relatively often, in other words, actual holes. And in these gaps, it's relatively easy for market makers and for the price in general to pump the price up or push it down, because significantly less liquidity is needed for certain price actions. So that's definitely something to keep in mind. But now let's go back to our previous range, 1400 periods. Let's display the whole thing. Combining all of this with our Fibonacci level, of course, gives us a perfect reference point here. And as I said, this isn't something that's been nicely prepared or anything like that. It's a completely live example based on the current Bitcoin price. As mentioned, it's completely live at this very moment. I think it's definitely much better to present everything this way. And what I would do now, or rather what the trading strategy is based on, is making preparations in advance. We position ourselves using a limit order, and I'll show you in a moment how that works later on. But we're already positioning ourselves now based on the Fibonacci golden pocket and this volume spike so that we can place our short position accordingly. And as I said, all of this is explained in detail in my PDF. There, I've summarized everything again, what you need to pay attention to and where each order needs to be placed later on. But here's an important note. I always enter the position at the lower edge of the Fibonacci golden pocket at the 0.618, and that is practically exactly the area of $117,400. And that's where the limit order will be placed later on. I then place the stop loss just above it. So we definitely need to leave some room above the Fibonacci golden pocket level. And here as well, based on experience, it definitely makes sense to place the stop loss where you can already see a clear drop in volume, where there is a noticeable decline. And that's why it definitely makes sense to place your stop loss here at 0.8%. Important info here. Always use at least a risk-reward ratio of 1 to 2. So there must be at least a 2 here. And what a surprise! A risk-reward ratio of 1 to 2 fits perfectly with taking profit at the 0.5 Fibonacci level, and the entire strategy is based on that. If you find an entry at the Fibonacci golden pocket level, it's important to always place your individual take profits based on the different Fibonacci levels, basically at the 0.5, 0.382, or 0.236. So those are definitely the reference points. That's why this would have basically been my trade setup. I would have prepared myself in advance. Now we can take a look at the whole thing, completely live with Bitcoin to see what would have happened, so to speak. We can observe the whole thing. In this case, the price is now slowly but surely climbing up through the individual Fibonacci levels. And now in this case, the spike upwards is about to happen. Then you'll also be able to see here at this point, right at this exact moment, at the 0.618, our order was triggered exactly at $117,400, and simply because there's an enormous amount of volume here, yes, because this area is extremely contested, we've now encountered a clear resistance here. This means our short position is now open. We can now continue to observe what is the price doing in this case. We can move our Fibonacci a bit to the right, and then you'll have immediately noticed that we've now perfectly hit our first take profit at the 0.5 Fibonacci level. This also perfectly coincides here with an increased volume spike. So these are definitely extremely important reference points for the take profit later on, that there is also increased volume happening here. This means strong support is coming in here again. This is definitely another area that is fiercely contested. I can also quickly highlight it here in color, specifically in this area where the pink volume, the pink histogram appears again. There is extremely strong support. That's why it definitely makes sense to take some initial profits here. That's all for now on this point. That's how the entire trading strategy works. As I said, you can find all the details in my PDF because there I also explained how to set up TP1 and TP2, so to speak. You can then set up your second take profit accordingly here, and as soon as the first take profit is reached, you can also move your stop loss into profit. That's all for now on this point. We'll also end playback mode at this point. And as I said, the trading strategy obviously works for both short positions and long positions. We can now do the exact opposite, meaning instead of going from swing high to swing low, I'll give you another example here, this time from swing low to swing high. We basically draw the exact same Fibonacci level, but in this case, in an uptrend for long positions. And now it's extremely important to observe, where is the Fibonacci golden pocket level located? And here, it's especially important to observe where the Fibonacci golden pocket level is located. And if you've been paying close attention, you'll definitely know that the very first thing we need to do now is adjust our period length, because in this case, we don't want this entire block of the structure to be included in the calculation. In this case, it's rather irrelevant. Now, we want to use significantly fewer periods here, for example, set the whole thing to just 600, and then you'll immediately notice that the data is now only calculated from this point onward. And here, what a surprise, we once again have perfect confluence between the Fibonacci golden pocket level and the increased histogram in the volume. This means that right here at this spot is an extremely strong area, fiercely contested by both the bulls and the bears. Here, extremely strong support comes in again, and that's why you can already prepare in advance with a limit order at $111,300 US. That's definitely where I'll be building my next long position. That's definitely the plan from my side. Of course, you have to look at the whole thing in parentheses, especially when it comes to swing trading. The question, of course, is whether Bitcoin will even drop that low again. But even if it doesn't, it's not a problem at all. In any case, we were prepared. We can watch the price completely relaxed. We don't have to react live in the moment or anything like that. Even if Bitcoin shoots up from here, nothing is lost. In that sense, all we've done is prepare ourselves. That's why I'm now going to show you concretely, using a live example, how I would proceed with Bitcoin, and I'm actually going to do this one-to-one in my private trading as well. So after this video, I'll leave everything exactly as it is. We can gladly talk about it again in a week or two to see what has become of this position. So now let's switch over to my trading exchange. There, I'll show you specifically how I prepare myself for a trade setup with this trading strategy. Personally, I place all my trades on Bitfinex. So I'll demonstrate everything there, showing you how I prepare, because here we also have the option to set the individual partial profits later on. So if you want to replicate everything later using this live example, it definitely makes sense to use Bitfinex as well, so you can make the same settings here. I've also linked it in the video description. At the moment, you even get a completely free $400 bonus. Depending on what you deposit, you'll receive a bonus credited to your account here. As I said, there's a current promotion you can take advantage of with the link in my bio. It definitely makes sense, especially if you don't have an account here yet, because with the bonus, you can try out the exchange completely free and risk-free at first. That's all for now on that topic. Now I definitely want to prepare my position, specifically right here, at $111,353 US. By the way, on Bitfinex you also have the option to simply right-click, for example here, at $111,330 US, and select copy price. Then we can set everything up under the limit order. That way, everything is entered directly here. In this case, I can then choose in USCT how much I want to invest. In this case, I want to build a position totaling 1,000 USCT. When it comes to take profit and stop loss, you just click on advanced here, and then you can set at which point your position should be triggered by the take profit. I always use the Fibonacci levels as a reference, and in this case, it's based on the 0.5 Fibonacci level, which in this case corresponds to the number $112,600 US. I then enter that directly here, $112,600 US. And you'll also see a notification right here on Bitfinex. We can take a profit of 22.4%. If we display the whole thing here, that's exactly $219 US that we can take as profit, so to speak. Before we confirm everything in a moment, I'll also set the stop loss right away. The stop loss should definitely be set just below. From the moment when the volume starts to decrease accordingly, we definitely need to measure everything precisely in advance. I always recommend that you simulate the whole thing here directly with a long position. So if your entry is here, your take profit is here, exactly at the 0.5 level. As I said, for now, we're assuming that we'll close the entire position here. Later, I will show you how to take partial profits, and in this case, the stop loss should be set below here so that we have a risk-reward ratio of exactly 1 to 2. That's always very important to me personally. And then, in this case, I can display the whole thing here. $110,700, 110,735, and that's the trigger, 110,735. Then you'll notice here, it's exactly a 1 to 2 risk-reward ratio. We can lose minus 11% here, or we can gain plus 22%. If we display the whole thing here as well, you'll see at this point that we can now lose a maximum of $100 with this trade. Then we click on confirm, and we can display the whole thing here once again. With open long position, we have everything once again in the overview here. Click on confirm, and then you can see right here how our order is displayed, where our entry is, our take profit, and our stop loss. Of course, what you can do afterwards, which I can quickly show again, is if your position gets triggered. Yes, I'll show you that very briefly using an example of a normal market position for when you're actually in the market. As I said, I'm just showing you now how you can set all of this up afterwards. Afterwards, you can actually quite simply move your take profit directly in the chart again once your position has been triggered, and accordingly, you also have the option to move your stop loss into profit afterwards. It definitely makes a lot of sense, and here you can also enter your take profit and stop loss, and accordingly, you can also realize partial profits here. You can then, in practice, enter multiple trigger prices afterwards and specify under order quantity what percentage you want to realize. So there are definitely several options available. Theoretically, you can also set up a trailing stop loss on the other side, but that goes even deeper into the details. By the way, later on you also have the option to reduce your position by, for example, 50%. All of this goes into more detail, which I have explained later in the PDF. For now, I'm going to close everything related to the market order. As I said, in this case, I'm just leaving my limit order open at 111,000 US dollars. That's currently my plan when it comes to long positions. So that's pretty much it for this strategy, and as I said, it keeps working time and again. I've seen this happen so many times with Bitcoin. I've also prepared a small example for you here where exactly the same thing happened. Just very briefly, playback mode, and I'll show it to you again right here. Here we basically reached a new all-time high with Bitcoin in February at 109,000 US dollars. And here we reached a new low point. Right at this point, I drew the Fibonacci level. We can also see here that there's confluence between our volume spike and our Fibonacci golden pocket level. So at this point, I would have immediately prepared myself with a short position. Anyone who entered the short right here, in this case, would have set the take profit just above. 0.8% is recommended on an hourly basis, and then you can also go for a risk-reward ratio of about 1 to 2 here. At this point, it lines up perfectly again with the 0.55 Fibonacci level. You know the usual game. Let's take a look at the whole thing. Then you will have noticed here as well, we briefly dipped in and immediately hit our take profit. So at the end of the day, it's always exactly the same game on an hourly basis. The hit rate here is definitely incredibly high, because statistically speaking, the Fibonacci golden pocket level 0.618, 0.65 is just that effective. You've probably heard these numbers quite a lot in today's video, but statistically, it's simply an area where the price keeps coming back to, just so you're definitely aware of that. Now we're definitely moving on to part 2 of today's video. Here, I'll quickly show you a scalping strategy where I actually make use of these Fibonacci levels on the 2-minute chart for Bitcoin. And now we're going to talk about the next indicator. And I'm going to do all of this live right here using the Bitcoin price as an example. At this point, I don't want to create some kind of perfect scenario from the past. Instead, we're going to look at Bitcoin completely live on the 2-minute chart. So let's dive right in here. And what's definitely important now, we absolutely need our new indicator. In this case, the Vincent Swing X. It's definitely a huge help for identifying individual highs and lows. Yes, for some of you it might sound a bit boring, or many of you already have a trained eye for the chart. In quotation marks, it's also unnecessary when it comes to the individual highs and lows, because with a good trading eye, you can obviously spot them yourself. But I think for some beginners, it's definitely helpful to have these reference points for the individual Fibonacci levels. So this is how we're going to proceed at this point. Also, just a quick note before we dive into an example in a moment. You need to adjust the numbers in the settings accordingly. For example, if you enter significantly fewer numbers here and the range is much smaller, you'll get a lot more points as a result. And you definitely need to be careful with that, because this can also lead to the Fibonacci levels being drawn incorrectly, among other things. That's why I recommend, even if you have a well-trained eye, it's better to turn it off. But if you still need some support, definitely turn it on, and depending on the time frame, you'll need to adjust the individual numbers so that you get clear highs and lows. Now I'll tell you how you can proceed, so to speak. You draw the Fibonacci level from one high point to the respective low point, and what you'll notice here as well is that we very often have confluence with the Fibonacci golden pocket level, specifically with the 0.618 or 0.65 level, and this works incredibly well for scalping strategies too, where you repeatedly enter short positions. Exactly at this level, with the stop loss just above it. Also, always make sure at least a risk-reward ratio of 1 to 2, so you could at least set the take profit at the 0.382 level. That would definitely be a potential approach. In this case, we definitely could have taken a profitable short trade. And now we come to an important point. As soon as new lows are reached, the current structure is logically broken, and then you have to draw the Fibonacci level from this high point. And that's why, as I said, I added the indicator from the red point to the new green point. This means we have a new structure and we have a new area for the Fibonacci golden pocket. And what a surprise, the price dipped in again. Once again, we could have taken a perfect short position here, exactly at this level, with the stop loss just above, and then accordingly a minimum risk-reward ratio of 1 to 2. You know the usual game, and this way you can practically keep taking advantage of the structures. Then a new structure has formed here as well. A new green point has appeared here. We can also take another look here and check from the high point to the low point. And what a surprise, here too, we briefly dipped into the Fibonacci golden pocket level. You can see again and again, statistically speaking, of course it's no guarantee, but the hit rate, the probability is already quite high. Now, of course, the question might come up, hey Vincent, doesn't it also make sense to use the volume profile here? And yes, you can do that, among other things, but one thing should be said. In my experience, it's much more difficult here because there is simply far too little data available, and the smaller the time frame, the less accurate this volume indicator becomes. That's why, when it comes to scalping, especially on the 2-minute chart, I would definitely recommend that you rather disregard the volume profile here. Other indicators make more sense in this context. You could theoretically also use my own indicator here, something like the KVBSO. With that, you can also read quite a bit, for example, whether there is a downtrend or an uptrend. Such an indicator is much more helpful in the context of scalping than my Vincent liquidity profile here. So just so you're aware of that as well. As I said, to quickly summarize again regarding this strategy, it works very well on the 2-minute chart. You should definitely try out Vincent SwingX. As I said, it's more for beginners, so you don't make any mistakes. Otherwise, if you can read price action, it's usually self-explanatory. We have a high point, we have the individual low point, Fibonacci golden pocket, and depending on when the structure is broken, we get new lows, and then you'll also be able to see here, new low. Exactly, we've dipped back into the Fibonacci golden pocket again. You can definitely see that the trading strategy is quite precise, and you can take advantage of it even on the smaller time frames. In this case, you can experiment a bit more, and I want to make that very clear. Especially when it comes to scalping, there are several variations. It can definitely be advisable, especially for beginners, to add another indicator so you don't make any structural mistakes here. Don't get the idea to take such mini swings here or anything like that, because then the trading strategy definitely won't work. You definitely need a higher level framework. You absolutely have to know what the higher level structure is, even on the 2-minute time frame. So you absolutely must not make beginner mistakes here, like zooming in too much and starting to do things like this. So it's really important that you definitely stick to certain rules here, and that's why it was important to me to present this indicator to you, because this indicator gives you clear reference points for where a Fibonacci retracement can be drawn and where it can't. Yes, that's why it was important to me to point this out again, so that, as I said, you don't just start doing something random, but that you know exactly, okay, reference point, new reference point, Fibonacci golden pocket, because only then does the strategy logically work. So it's not that you're trading with the right strategy, but using the wrong approach. That would definitely be extremely annoying. Otherwise, as I said, that's actually it for today's YouTube video. Of course, feel free to leave a like and subscribe. Everything is linked in the video description. If you have any questions, we'll definitely keep exchanging ideas in our Telegram group. Especially here, we definitely have a chat function, and I'll keep you updated here about my trades. I've already prepared a concrete roadmap for you in this case, so you'll always be up to date there, and a total of 93 people from my community have already taken advantage of it. So you'll definitely be in the know. Otherwise, I'd like to sincerely thank you for your attention. Of course, feel free to check out the other 2 videos as well. One is the trading video course here, and also the other trading strategy. And otherwise, I'd say we'll see each other again in the next video.